Hello, in this recording we're going to talk about when to trade as a day trader and maybe more importantly, when to stop trading, when not to trade. Now, we all have been brought up to believe that you make more money by working harder and longer. In trading, unfortunately, that's not quite the case. In trading, you need to work smart. Part of that is determining the best times to trade. So you probably have looked at enough charts and traded enough to realize that most markets, just about every market, no matter the time frame, seems to move between stages of consolidation, also known as chop, where price basically goes sideways and doesn't progress far in any direction, and periods of trending, where price just heads down or up as the case may be. And these periods alternate. So you are faced with periods of rising or falling prices, trending prices, and then periods of consolidation. And here we see after this trend, again, we have the consolidation, the sideways price movement. This is evident on every time frame and on every instrument. So the question for us is, depending on the system we use, and most of us use trending systems, systems that make money when there is movement in a direction, either up or down. The question for us is, well, what is the best time? At what time can we expect to find the best trends in our market? And there's many different ways of looking at this. You can just scan through charts. What one of my colleagues at NetPicks has done is he's actually performed an analysis where he's looked at several years worth of data in half-hour increments, and he used that information to determine during which half-hour periods there is the greatest price range in different markets, meaning the largest price moves. So let's just look at an example. This is crude oil, and this shows us that at 8:30 New York time, again at 2 p.m. New York time, we have the largest price range in those two half-hour periods. But you can also see that during this entire 8:30 to roughly lunchtime, to roughly noon, a little bit before noon, during this entire period of time, you have some pretty nice range in the half-hour price movement. So you would imagine that if you are trading a trending system, you can do much better here, where you have a large price range, than you would at these times, where the price range is only a quarter of what it is up here. Obviously, a trending system that doesn't move, where the price range is very small, is not going to do well. Similarly, on the S&P, if you look at a start, now this is Central Time, so 8:30 would be 9:30 New York time. You see it's really the first hour and a half on the S&P that has the greatest range. This is when you see the largest movements in price, as opposed to later in the session where the range in price is almost half of what it is in that 9:30 to 10 or 11 price range, or later in the afternoon, or obviously overnight. So doing this type of analysis, and there's other ways you can look at the data too, helps you determine what are the best times to trade. As it turns out, looking at a wide variety of instruments, typically the best time is right at the open for things like index futures, stocks, etc. In the case of instruments like crude oil, some of the other futures, the start time may be, the best time may be a half hour to an hour before the actual market opens, and then throughout the morning. So what we have learned at NetPicks through many years of trading and experimenting is we've learned that the best time to trade is early and to limit your trading. So as you saw from those graphs, there are times in the day when the price range is very small. So obviously you don't want to trade there. The other thing we've seen also is that not every day do we start out with a good trading range. But on the typical day, The beginning of the session will give us 1, 2, or 3 really solid trades. And then we get into the churn and the chopping. So we've developed a dynamic profit setting strategy called power of quitting. And what power of quitting says is, after you have had X number of profitable trades and you are net positive for the session, stop trading. This is different from a traditional goal setting strategy where you're telling yourself, I need to make X number of dollars, or I need to make X number of ticks in each session, and then I'll stop. The reason the power of quitting is better is because you don't have the same price movements in every session. And whatever your goal is, you will find days where it's just not achievable. And you're going to keep trading, and you're going to lose eventually, and maybe dig yourself a deep hole. With power of quitting, we're adapted to the dynamics of the market. So we're looking for typically 2 winning trades. One of them should be a full winner, not just a 1 or 2 tick winner, and a net positive result. On some days, these can be huge results. On other days, these can be more modest. So just taking a look at this was from trading we did today on crude oil. And we typically start trading crude oil a little before 9 o'clock. Our first trade today on crude oil was this long trade right here, which came at, as you can see up here, 9:12, 9:13 in the morning. So that was before the equities opened. And as you can see, this trade reached its target, which was at this level where the fat dot is, and almost exactly reached the level. And then these blue dashes represent our trailing stops. So it's a multi-position trade. We got out of half of our position at this fixed target, and the other half we got out at this trailing stop. That was our first winner. Then our second winner came right after it, actually, and this one actually worked out even better. And we got our full target, which is this thick dot. And then finally our second position, our trailing position, stopped out at more than that amount, and that happened a bit later in the morning. For us today, that represented 75 ticks on crude oil, $750. Now, not every day does it work out so easily. So, for example, here we'll look at heating oil, and this was yesterday. Yesterday on heating oil, we started out, and we also start a little before 9 o'clock on heating oil. We started out with a partial winner. You'll notice the fat dot, that's our target. Price didn't quite get there, but we stopped out with a 1 tick profit right here. Our second trade, this one we don't take this yellow setup. We have reasons why we don't take it, and it has to do with news releases, so that's why we skipped this one. But our second trade was this one, and this was a long trade. This white one didn't trigger, but this was a long trade. Again, we didn't quite hit our target. Instead, we got out with a partial profit. Now you remember I said our power of quitting rule calls for 2 winners, one of which has to be a full winner. So in this case, we had a partial winner. We did not get to the full target, and another partial winner that did not get to the full target. So we actually needed 3 trades total to achieve our power of quitting goal. And the third trade came right after that. And as you can see here also, it was a very nice, very strong winning trade. And once we got that, we stopped trading. So by not trading, we avoided this losing trade here. And, well, this was a break-even trade, essentially. We missed out on that one, too. But we got 131 ticks for the session. So I mentioned that the power of quitting is a dynamic profit-taking strategy. So in these cases, we see that we had very nice profits on both crude oil and in the case of heating oil. But let's take a look. This is also yesterday for RB, which is the unleaded gas. In the case of RB, we had this first trade. Price actually touched the target, but we didn't get filled. So we got out of both of our positions at this trailing stop. We got one tick. Technically, because the system had reached the full target, we would consider this to have been a full winner, even though we, in our account, only made 2 ticks. All right? So we got very close to target. We actually touched the target, but we didn't get filled. Then, again, here's a trade that we did not take because there was news at this time. But we took this third one. And this third one was also a partial winner. So we also got just 1 tick out of it. Now, this isn't much, right? Compared to the 130 ticks or the 75 ticks that we saw in crude oil, this isn't much. But this is what the market was willing to give us. And we did this trading during the best time of the day based on our historical analysis for trading these instruments. So we stopped. And in our example here, we only made 4 ticks. It's not a huge profit, but it got us out of the market. As it turns out, it ended up being a pretty good session after this, and we missed out on some nice winning trades, but more often than not, after you've had one strong trend, you're going to be faced with consolidation. So we just stick with our rules. We don't cry over missed opportunities because the next day there will be more. We had a similar situation also with the Russell, and that was today. And on the Russell today, we start at 9:30. Our first trade, you can see, did not get to this fat target. Instead, it stopped out right there for a partial win. And our second trade, even though it got close, it came actually within 1 tick of target. It didn't quite reach the target, and we got out with another partial. Now in this case, because we had been so close, within just 1 tick of target, we counted this as a full winner, and we took our power of quitting. So again, a modest power of quitting, but as you can see, price did churn quite a little bit after that. Eventually, there were some decent moves, and we missed out on them. But again, we never know this. We can see it easily in hindsight, but history and experience has proven that after moves, we get consolidation. And by using the power of quitting, we get out with a profit, and we get out ahead of the curve. There's a few other topics that we can get into. So we've talked about the best times to trade, and we've talked about power of quitting. In a future video, we'll be continuing this discussion, and we'll talk about the one and done trade and the circuit breakers that we use. So thank you very much for your attention, and I hope that you take this to heart. You don't get paid by the hour as a trader. You get paid for trading smart. So pick the best instruments and the best times to trade, and use a dynamic profit-taking strategy. Don't lock yourself in to profit goals that may not be achievable. Thank you very much. Bye-bye.